But
All right, hold on. I'm trying to put up this. I got to put up. I'm just putting up the. I want to put up a long-term S&P so we can go back to that. Here's the '07 level I was just talking about.
yeah, you could see it on that '07 when it failed to make a high. I'll get into it now too. Okay.
Wait, you're looking at a quarterly or a monthly chart?
Well, hold on. I'm going to go to a monthly, and we could see it pretty well. Oh, yeah, that's after all that nonsense, and it went up. Well, because we're getting the futures, but if you look at the cash, it's like 1575, 76, and it went and just took out those previous highs from March of 2000, and then we had the test, and then it just barely. And then it closed that month just below those highs. You see where the close was. So, I mean, it was classic in so many different ways. Are we doing the same thing here? I don't know. I'm not looking for it, and I'm not calling a top. There are a lot of things out there. You know, my concern is more that people are way over short volatility. And I guarantee you last night that all the short vol positions we're selling more vol. I'll bet anything on it because they have to. They can't get out. They're too big. They're too big. And if they were selling S&Ps as a hedge last night, well, we know how that's worked. So I don't know. There's a lot of stuff going on here, and what it really, you know, the White House plays this game, you know, and I'm sure they're going to roll out Kudlow, Mnuchin, or Kudlow, and I don't know who else they'll find to talk. Well, you know, it was misconstrued, you know, because they didn't like the action. We'll see with that. But when you really step back and take a look, in my mind, Trump also, by doing this, gets to play the Fed. Because the Fed cites all these issues as being transitory. But if Trump keeps bringing them up and keeps playing this game, they become more than transitory. And is the Fed going to, you know, and as I posted to the blog in response to somebody this morning, you know, the Fed actually has an easy way out here. They should just cut the interest on the excess reserves, and that'll result in more liquidity making its way into the system. Will they do it? I don't know. You know, Powell sends a lot of different signals too between the White House and the way that he orchestrates this. First of all, he should stop having so many press conferences. They're ridiculous because he really has nothing to say. When you have nothing to say, you wind up tripping over yourself. But it winds up that Trump really can trap the Fed here, because if he keeps putting pressure on and creating volatility, the Fed's going to have to respond. Have to, because there's just too much risk out there.
I'm just looking at the VIX volatility here because you had me on a monthly, and the high of the day is the 200-month moving average, and it's also where the oscillator resistance comes in at.
Okay, so I mean, we all see what we see, and again, tell me what these guys were doing, what these position players were doing last night. They had to be selling it because they're a believer that this is all based on the Fed. They don't care. They don't care about the trade. And to tell you the truth, I don't really care about it either, because the more you know, anything that exists out there and becomes part of the daily conversation, the impact is already absorbed in the market. I could say, well, no, Ira, you're wrong. Look what happened last night. Well, yeah. The good outcome is absorbed in the market. The bad is the unexpected, and that's what you can play with. And are the Chinese, you know, there's some who think that Lighthizer said that the Chinese were backing off, and this was, and what Trump did was at the behest of Lighthizer, going, you know, show them that we're dead serious here, that we may as well end this, because if they're going to keep backtracking, or what I call slow dancing this, we're not going for that. So was that the reason? You know, maybe, but whatever it is, I guarantee when we see what we see, the vol groups were selling more, because they cannot possibly get out of this position, especially in a nighttime session. There's no way you can start maneuvering yourself around this. So.
Yeah, I mean, that was my point to all these guys: is what are you going to do?
Yeah.
You can sell them down here, and then wear it in the morning.
Yeah, you can't. And look at what the dollar did, and and really look at. I'm looking at the Swiss where it opened last night. We're exactly there. The gold is basically exactly where it. Everything is back to where it opened. Even the S&P is basically where did we open? 29.1775 in the night session. We're at 29.18. I mean, I have to laugh because having traded all these years, this is stuff. This is a rarity because you would get news items that would be big, and if there would be some sustaining to them. And I thought we were almost going to be there last night because even when I woke up this morning, the S&Ps were still down 48 handles when I got back on the screen, and that's where they were for 6-7 hours last night. I mean, there was really no movement.
Yeah, I talked to one of my friends, his big market maker. He just said there was nothing for sale today, at all.
Yeah, right.
Nothing for sale.
Because you're stuck. Well, it's really more important to watch the options. And I'm not talking about the VIX. I'm talking about the volatility across the board. Because people are making a mistake if you think that the VIX is the only play here. They're selling vol across the board. It's an insurance policy. Everybody's an insurance underwriter right now. They sell gold vol. They sell currency vols at all time. A gold vol, under 8. It used to trade consistently at 16%, 17%. Silver would be up at 24, 25%. They're just not there, and they're crushing them. And they did it last night. That was really not a reason for the gold to rally. The gold's not going to rally because the S&Ps break. The gold is on a different venue all itself. The gold currencies, they just kind of sit here. And the curves, they flattened initially, but then they're kind of hanging out here going, okay. Because if this were to fail, then of course, then the Fed really has a problem. If these trade talks fail, they're going to have to come in immediately because they'll be worried about a slowdown, and then the inflation will not be transitory. So, as much as the S&Ps are an interesting play, you saw last night the December 20 euro dollars. What did we do? How high did we get last night? We got up to 86. So it was 14 basis points. It had rallied 14 basis points. So significant moves in the interest rates. So as I say, there were a lot more things going on last night than just the S&Ps. And again, how the SEC sits there and watches this and allows these tweets to go on while they beat up Musk is
because they're okay.
They
always have been. So.
Well, I would until I know that, until I see the pictures, or somebody drops a few hundo, and I'm not talking about hundos, dollars, or 100,000. I'm talking big guys. Otherwise, we got nothing.
Yeah, well, here I'm just looking at. You had me looking at some of these longer time frame charts. I'm just looking at the 5-year. That's just been for the last 3 months, just stuck up here, hovering around its 200-month moving average.
Right. Yeah, they're all, and that's because the vol sellers come in, and they're not just selling vols. We know it. They pick different instruments, so it's like the risk parity guys. They do it differently. But it's all comes down to really being the same trade. It just gets expressed. That's what derivatives are. The ability to express a viewpoint in many different ways. Everything's a derivative of a derivative. So it's interesting to watch. And that's what has to bother the Fed. And they have to be watching today. Look at the hogs. The hogs closed great on Thursday, Friday. Today, limit down, and it looks like they'll be limited down another day or two. So there were all kinds of things that took place because of the trade.
I was
and got expressed.
I escaped I escaped my hogs by the skin of my chinny chin chin, no pun intended. Just last Thursday.
You know what? That's what good trading is. You know, you see it, it doesn't hold. And with all that good news, it still couldn't go back and make new highs. You know,
Well, last week, everybody kept asking me about the grains. They want to be long the beans. They want to be long the beans. I said, don't touch the beans until after Friday. Just wait for the maize to go away, and then, you know, you got another game starting. And guys don't understand that.
Yeah, I know that Gartman was talking about it. Somebody told me that he said that corn would have been higher today. You're probably right, because I'm not in the Midwest, but I hear all this is rain. So you're going to lose acreage in the corn. I know that for as long as I've traded it. No matter how good the genetics are and the science, you're still going to lose some of the crop. You just can't get into the fields, you know. And at some point, farmers go, it's not worth it, because if I lose 20 or 25% of the crop, you know, due to this weather and the ability to have a full growing season, so you're going to lose some. So I'm sure you're going to see people buying corn and selling beans, because you can still plant beans, you know, later than corn. So I mean, there's a lot of these things that are going to be going on. But I am amazed at how much this White House does this, and it's all, to me, orchestrated. This is not happenstance. Because Friday, you know, good markets going up. They couldn't talk it up more. Weekend, you know, no, it's not going so good. Oh, you know, it might, whatever.
It's totally manipulated. Definitely.
It is. It is. If it's not, this is one you better prove to me that it's not, because I've just been around way too long. And I've watched the Reagan administration. I've watched all kinds of.
So what do you think? You think Deutsche Bank is doing all his trades, and that's why we can't see the books?
I don't know, but I'd clear his trades for free.
So would I take a look at Jared.
I'm going to tell you what, I would put a halt to, you can't let them tweet. And I don't care what the court says. You know, I know they'll say, well, it's freedom of speech. No, it's not. You know, you just, you know, handcuffed Musk, rightfully so. I don't have a problem with that, because it was abusive. Why should CEOs get to tweet things out? Somebody knows what they're tweeting. They don't just sit there and go, oh, I'm going to tweet now. No, there's discussion that takes place, and then it goes out. So if you're going to tell me that people, come on, this is the greatest game ever. We're back to the telegraph. You know, when the first thing that anybody used the telegraph for was to fix races. I don't know if you know that, but when the telegraph was invented, the first thing they sent was race results, and because people were used to making bets afterwards, people who had access to it were skimming and scamming the game.
Oh, you gotta love technology.
It's like
you know, technology is great. It's just the people who use it. I mean, it's truly amazing that, you know, for all the crap that the press beats Trump up about. God, I can't believe that the business media is not all over this. It's you know, I know you can't prove it, but you can't prove anything, and it makes its way out there. But you can prove this. You know what? It's too timed. It's just too timed. It's just too timed. And we'll probably close higher today. Watch. So we're due for Mnuchin. We're due for Mnuchin spotting, or Kudlow for sure. Kudlow is he's got to have a little more sugar in his coffee, and then they'll roll him out.
That's beautiful.
And people go, oh, you must have. No, I'm not. I haven't. I'll show me yours. I'll show you mine. I didn't lose a dime, and you can't even call and complain, because you know what? You're gonna run up the flagpole anyway.
Ira, put it in the suggestion box.
Yeah, right in the middle of the pond. I know. I have to swim out there.
Ira, if it's true that China has a dollar shortage, right?
Yeah.
And let's also assume that tariffs go into effect and they stay there. Do you think that crimps China's ability to continue their gold buying campaign?
No, it doesn't. Because they'll buy domestically, which they have been doing. They've been buying everything the domestic producers produce. They'll pay it in yuan, and the miners will go out and take the yuan and change it into dollars if they want. This won't affect them whatsoever. And they can also ask for gold. One day, if they really thought that, they're selling, they could, for all the goods that they're selling, they could ask for payment in gold. That's the way the Russians are doing. The Russians are asking for some gold for oil. Not a lot, because, there's just a lot of people who can't partake in it yet. But it's got to be part of what their bottom line is, because the Russians are buying phenomenal amounts of gold also. And it is interesting with all of this today. We saw of course, the Turkish lira got above 6 today. So you have all these other things going on. You have the Iranian situation, which is no small boat. You had the conflict escalate in Gaza and Israel, and I'm not sure that the Iranian situation with the U.S. and Gaza isn't tied together anyway. So all of this, it's just not a China. I would almost say that the China news, I know from the stock market perspective it was bigger, but from a geopolitical perspective, I would say that there's, and then you have Venezuela. Yeah, so you have a lot of things on the boil, as I would say, and market, sell more vol. Sell more vol. And if you would take the euro stockies, even the shit euro, the stockies making multi-year lows. God, which is hard to, because everybody talks about how well Sweden is. Oh, let's see. We're at the lowest level since, the euro is the highest against the stockies since, what is that? In 10 years, basically.
What are you looking at? The Euro stocks against the DAX?
No, I'm just looking at the currency. The euro against the Norwegian, the Swedish krona, which ought not to be happening either. And they say it's in response to the Chinese tariffs. I don't buy that, because I mean, tell you what, once they're done with China, one way or another, you can bet that Trump's turning his sights on Europe. There's no question about it. Which, it made sense why the DAX got hit, because of the European auto sectors. But if you think he's going to stop there, why would he? If he has a victory here in his eyes, and so that'll be the next stop. So and I don't know. There are a lot of things here. Really. And of course the European elections are in 2 weeks, so that'll even add more uncertainty into the pie, so to speak. So there's a lot here. There's a lot here, and I know. You know what? If I'm a vol seller, I'm celebrating, because I got great levels to hit. Vol spiked this morning. But I'm not buying. You know what? Because buying hasn't worked in quite a long time. Can we agree with that?
Oh yeah.
Vol buyers have not done well. It has not been their time. So, and yet right into it, that's why and I wrote about that, and we've talked about it. That's why I compared this to long-term capital, because these people cannot get out. They can't get out. These positions are so massive that they can't get out with absolutely disrupting the entire global financial system. That's how big I believe these positions are.
Wow.
And I go back and think about everybody in 2005 and 2006, a lot of guys from the floor, they went and became mortgage brokers. Yeah, we know.
Yeah, they made a lot of money.
They did, unless they stayed.
Unless they stayed a little bit too long. that's a really good point, Ira, is, well, everything. I'm just sitting here listening, but I've been using, and I've been thinking about the long-term capital, and especially what you wrote in your blog, and how you can fit everybody that was affected by that, into a boardroom, and then you've got the 0708.
Yeah.
That was such a really, really good visual and a good analogy, and that's the way I think. And I really thought that was so beautiful. And I tied it into it just in my thinking and in my own notes. Tied that into for the gold, the gold for, or the oil for gold and yuan in China, and how that's changing the world, and what Angela just referenced.
Yeah, no, I remember when I said that I was on an interview with Kathleen Hayes on television, right when all the shit was starting to hit, and Alan Blinder was on, and we were having a fairly heated argument about it. And that's when I said it, because he said, well, yeah, because Kathleen asked me, she said, you're not inferring a depression. And we went to break, and then Alan Blinder said, oh, there's no way that I was inferring that we're coming to that type of economic calamity. So who was I to argue with Alan Blinder? But it was, and so I made that comment about the Rose Bowl, and I walked out of the studio, and my cell phone rings, and lo and behold, it's Jerry Considine calling me. He had seen the interview. He goes,
Oh my God!
That's the great. Yeah, he called me. I'm walking down 58th Street. I'm in New York. I go, what do you want from me? He goes, I saw that interview, Rose Bowl. It's the greatest line I've ever heard. He said, I'll never forget it.
Neither will I.
Ira, going back to your short vol.
Yeah.
Last week's commitment of traders, I mean, as of Tuesday's reporting, was net short 180,000 contracts, and the 3-month average is short 117,000 contracts. Now
what are we talking about? Which
the VIX, the short VIX positions. Yeah.
Okay.
So net, I mean, as of last Tuesday's reporting, obviously it's almost a week old, but net short 180,000. The 3-month average is short 117,000.
Yeah.
So who knows what they've done in the past 5 days?
Yeah. That's a great point. That's why this room is so good, because you discuss those issues, because that tells you what really is going on, regardless of what anybody comes out, regardless of what I say. There it is in the numbers. It doesn't matter. There's the numbers.
We use a 1-year Z-score and a 3-year Z-score to kind of measure it against itself. So
right.
the current 1-year Z-score is negative 1.8. So if it gets a little bit closer to 2, I think it's time to wait for an explosion.
Yeah, and don't just look at the VIX. Then look at the gold. There's so many other things that they find ways to express, because again, you have to go and sell premium where premium is dearest, and you're going to squeeze it down and squeeze it down and squeeze it down. And you watch, it's interesting to me. I don't know whether you guys have noticed this, but it's when the gold pit, officially, the pit itself opens at 7:20 Chicago time. America, when that official opening takes place, they are somebody is a massive seller every day around the pit opening. Go look at the chart. It's on an hour. You can see it very clearly, because even if Europe's bidding up gold, they're selling it. They so they do it with the metals, except copper. Copper is the copper that somebody's trading it with the S&Ps in my mind, because they see it, as that relationship, both, economic indicators, and you see it overnight. When they were really scared, they ran and sold the copper. Now copper's 2 cents higher on the day, so it's had a 9-cent range overnight, a 9-cent range for the day, which is fairly substantial, but it's had big ones. And that's because people use other things besides just the VIX. The VIX is a good indicator in its own right, but they are definitely using other tools, because now it's a game of, and you got to put on their, you got to get inside their mindset, which is, hey, I'm making a shitload of money selling vol. I'm making a shitload of money. You know, Bill Gross has talked about it, and I was explaining to some people, said, well, what does that mean? I said, go back to 1987, and I can tell you this very forthright. Most of you guys were probably in kindergarten, but I knew a lot of people in 1987 because, you know, this was a new thing, what they call portfolio insurance. And there were a lot of people I personally know, not traders, but people who had approached retirement and were looking for some, you know, to ways to pick up extra return. And so their stockbrokers, that's what they were called then, their account executive stockbrokers, put them into they were short puts because everybody knew that the S&Ps were only going higher. So they were selling puts, out of the money puts on everything until October 20th. And I heard horror stories from people who had to go back to work. These are people 70 years old, 75, who got hammered because they, you know, when the good times were rolling, they were going, oh, you know, I'm making all this money. I'm short puts, I'm short puts, until the vols exploded going into that period. And they literally could not meet the calls. You know, they were getting cash calls, and they got blown out of positions with huge losses. It was a terrible time. That's when there was all that. That's why there was congressional investigations, because there were a lot of people, small retail investors, as we would call them, who got absolutely decimated. Because, again, chasing an extra 2, 3, 4%, they took on risk that they had no idea of. And these are comparable times. Listen, I don't know when it's going to happen. I'm a big believer in that famous Keynes remark that markets can remain irrational far longer than you and I can remain solvent. That's one lesson I've learned over and over and over again. So no matter what you think, and the market will proceed on its way. So all I'm going to do is trade it. I don't care. You know what? Go ahead. I see the big picture, but I have to make a living, and my trading and making a living but I'll be very cautious. I will not be caught. I can promise you, I may not make an extra 3 or 4% selling vol or 5%, but I won't get caught in moves like last night. Not worth it to me. You know, that's for others, and God bless you. You know what? It works, but again, don't get so big that you can't get out. Thinking that the Fed, because at one time, if the Fed cut rates to 0, I'm not sure that vols are going to collapse again.
Yeah, that's a good point.
And then you really are in a bad position.
Oh,
Everybody.
Ira, can you please repeat that? That is one of the most important things I've heard in months.
What happens if the Fed were to cut the rates to 0 and vols didn't collapse? Well, you know,
exactly.
But if somebody was managing your money and then putting you in a position, and if you didn't ask them that question, you would be wrong. Somebody, I don't know, did anybody see that article in the New York Times yesterday on the Norwegian trader who almost blew up the NASDAQ in Europe? There's a New York Times article. It's in the business, front page of the business, New York Times Sunday section. And I had known somewhat about this, but when I read the article, I found it very interesting. It was a lone trader. It'd be like tax, or if you had located to a spot and they granted you, they bypassed where you were self-clearing and you didn't report to anybody but yourself.
Sounds like different.
That's what this guy did. Yeah, well, bigger. Well, read the article. That's what they let this guy do. He was his own bank. He had made a lot of money trading in the energy markets, electricity and such, and he put on a monstrous position. And because they allowed him, they gave him the status, NASDAQ did, of the banks, he was self-auditing. So he put on this massive position. He was long. He was long. Oh, he was short German and long Norwegian, because the spread had always been fairly constant. But in 2013, Germany started cutting back and raising taxes on the electricity, so the cost of electricity in Germany became massive. Or, I may have this backward. It may have been, whatever the spread, which was always constant, had a major disruption, and he almost blew up the NASDAQ. And it was the guy with hundreds of millions of dollars of his own money, but he almost blew up the whole thing because they allowed him to put on these massive positions.
So
it's a good article.
Going back to your comment about cutting rates.
Yeah.
Everyone thinks that the Fed's going to cut rates. And what if the dollar continues to hold here, or maybe even grind higher? What would that suggest to you about the condition of the global economy?
If they cut rates and the dollar sustained itself?
Yes.
I would get, that would be a warning, because the end result would be, the Fed is very aware of the role of the dollar here, of Trump's views of the dollar. They don't talk about it. But again, when you read the minutes, those are sanitized. Most people don't know that either. Those minutes are not written with the full FOMC. They're written with the chairman and the recording secretary. I forget his name. Mick. He's been writing them for Yellen and for Bernanke, and he's still with Powell. And they write them. So they write them. He doesn't even have to pertain to the meeting. It can be with speeches in mind in the interim, because there's a 3-week period, I believe, until we see the minutes from the meeting. So it's not like you're not getting what exactly is discussed. We don't get that. You won't get that until 5 years, when the actual real recorded minutes are released, 5 years afterwards. The minutes you see are an absolute sanitized version of what they want you to take away. And that's with interim news and stuff also playing. So, and the Fed just told us that they were, they talked about Powell talked about the tariff discussions quite a bit, as to their view and the impact. Well, so there's a lot to that. So I think the Fed, if they were to cut and nobody else did anything, unless, of course, what are the other central banks going to do? Are they going to go more negative? Possibility. But that would be an outright currency battle then. Then it would be very obvious for everybody to see. But if the dollar holds on a Fed cut, a significant Fed cut, I'm not talking 5 basis points on the interest on excess reserves. It's like today, if the Fed said, well, we're going to cut the interest on excess reserves, which they could do. We're not talking about the Fed funds. We're talking about if they were to cut it, where is it at 240, 235? If they were to cut it to 2%, 35 basis points on the interest on excess reserves, so it doesn't affect the whole system directly, it will indirectly. That would be, and the dollar were to turn around and rally, then it would be a signal that there are things, people are going to dollars for, as the ultimate safe haven, even though they may regret it 6 months down the line, whatever the period is. But that would be a signal that things are not just a Fed cut. Again, only the interest on excess reserves. It's a different animal, and we've never been here. That's what people don't understand. Until 2008, I believe, there was no interest on excess reserves. If you were a bank and you deposited your reserves at the Fed, you got nothing. Nothing. So this is, and they only have 10, 11 years of dealing with this and the impact and trying to understand it without so much other stuff going on around it. So they could do that. It would free up a lot of reserves into the system if they were really worried about liquidity. We're not talking about solvency. We're talking about liquidity issues. So Yeah, it would be interesting. It's a very good question. I'd love to see. We saw what happened really when the Fed cut the 5 basis points on Wednesday, and that's all we heard until the press conference. What happened? The gold rallied, the dollar dropped, the stocks rallied. Everything did as you thought it would do because the Fed's in it. So they would now 5 basis points, of course, did nothing once he walked out. So now he's raised the stakes in the game. Let's see. And if Trump's looking for an interest rate cut, even more than he's looking for a trade deal, then it gets even more interesting because then he can back the Fed into a corner. Because if the Fed is afraid of tariffs, Trump just has to keep elevating it. And if it's not China, then go after Europe. Now what is the Fed? So the Fed is stuck here anyway. They transitory my ass. But I'm not the only one who was giving him shit about it. He's catching heat, a lot of heat about his communication. I expected better from Powell, but he seems trapped by something here. So.
Thanks, Ira.
What else? That's what I would say. But it would be a very interesting. I mean, I would love to see it market-wise. I'd love to see it. I'd love to see a Fed cut of the interest on excess reserves. I don't care about the Fed funds. I really don't. I think they've lost control of it anyway. And the only way to regain control of it is to make the interest on excess reserves a less important element.
Well, then it forces those guys to actually not deposit with the Fed, get free overnight money, and they actually have to put it to work somewhere.
Exactly. That's exactly it, Judd. That's the plumbing of this whole operation. And when you saw it in Europe, when Draghi, it had to speak to the, because the banks were screaming about the negative interest rates, and in fact, because again, there's an outflow of the banks to the ECB of $7 billion when the U.S. banks are receiving $49 billion. Significant. It's significant. So they'll have to wipe that out.
Would you short the banks? Would you short them on that?
Oh, yeah. Well, here's the two things that'll get discussed. That will be part of the discussion that they'll be getting less money. But if they're putting it to work, they'll be generating more revenue. And if it actually steepens the curve, the banks will rally because that's what everybody's geared for. So I wouldn't short the banks on that. They're not going to go negative. But it would create other opportunities for them.
Well, the regionals are what's picking up. I mean, the regionals held this morning big time.
Yeah, rightfully so, because they're not as impacted. I will tell you that there is something going on out there. That there is a bank that's suing the Fed. I don't know if you know this, called the Narrow Bank. It's just put together by a guy who, I think I talked about it here before, but he used to be at the New York Fed at one time on the desk, and he put together a banking institution called the Narrow Bank.
What's the symbol?
It's not listed yet.
Okay.
It will be TNB. The Fed hasn't approved it yet because they're called the Narrow Bank because they're not going to make loans. They're just going to take deposits and to put the money at the Fed. They want to be listed at, well, you know what? Hey, all these banks who are now paying you nothing, let's say on a good day, 1% on your money, on your deposits, they'll take the deposit and they'll be paying you, they'll shave by their own admission about 15 basis points. So if the Fed's paying 235, they're paying 220 and taking the 15 and just putting on the Fed. And it's the safest place you could ever put your money. It's at the Fed. And the Fed doesn't want them to do this because he's exploiting the chink in the armor. It's going on now. Go Google it. The Narrow Bank. There's a lot of acrimony between the Fed and this guy who came from the Fed because he sees it for what it is. and it'll probably make its way to the Supreme Court. Because this is a very serious issue because it blows a hole in what the Fed is trying to sell to the world. So, and he wants access. Listen, I'd like to do the same thing. I would like to go take deposits and say that I'm a bank and I'm a member of the Federal Reserve and do nothing but take the deposits, and you can do them electronically, and put them on deposit at the Fed, and take 15 basis points on 50 billion, 100 billion, 150 billion, 200 billion. Find the number, not that. It's a nice way to make a living.
Just like when you told the Merc to set up the FX card at O'Hare.
Yeah, oh yeah. I try to get him to do a few things. They didn't want no part of it. Yeah, that was an easy. No, the CME should have gotten into the cash currency business because it was a monster at that time. All right, I'm going to jump off, but go look up the narrow bank and you'll see how this argument starts to play out.
All right, Ira, thanks a lot for stopping in. It's always great.
Okay. All right. I'm sorry. Let me know when you get Mnuchin on, please. I'll turn it again.
Hey, my family's got no suck with the Republican side.
Yeah, Mnuchin, he doesn't know what he is anyway. Just see if we can get him in. It'll be worthwhile.
I'll get him. I'll start working on it now.
Hey, you know what? Tell Anthony with that hair, he should be able to get anybody.
Right.
That's exactly right. After my show is next Sunday, I'm up next Sunday. After that show, then I'll call Steve and say, hello, Steve. You don't know who I am? By the way, I want you to make me my own bank so I can take the NASDAQ up, not down.
Yeah, exactly. Thank you very much. Okay, you're in. You're in. Okay. All right. Take care.
Thanks, guys.
All right.